Good morning, 11/7/2012, 7:48 a.m. Pacific Standard Time. What do I have? I have this monster S&P bull rally on this weekly chart that started back in 2009. And every time we dipped in 2011, it was a year ago when we were selling like we are today. Let me show you. The Dow Jones down 251 handles. S&P hasn't had this big of a drop, and we always told everyone on stockmarketfunding.com and the analysis that when you break this 1400 level, that you're going to go down to the lower levels. Now, let me explain to my new MMTs. This is all election related. There's a lot of disappointment about the fiscal cliff potentially. It really doesn't matter. What matters is that the new MMTs understand that when the S&P 500, this blue line is called a 10-week moving average. When you're in a bull, you're traveling well above that 10-week, and that is what a bull looks like. But when you get 4 weeks below it, like 1 week, 2 week, 3 week, 4 weeks, 5 weeks, that is called a bear reversal to support level within the bull. But it's not a bull until you're back above the blue line. The 10-week has to be pointing up, and you have to have 4 weeks above the 10-week moving average, and the 10-week moving average must go up. Now, here is the problem for the bull, is that we are below the 10-week, and if I draw this trend line right here on the S&P 500, everyone, I'm going to go horizontal trend line across here, because what will end up happening is that there will be some buying opportunities that would be set up. We are right here where I've always pointed out where the consolidation of this last breakout is. This area of support down here is about 1373 on the S&P, where resistance used to be right here. Now, it's slightly above the 50-week moving average. I will caution new MMTs and our hedge fund managers that we know and everyone else around the world is that this blue bar is called moving average convergence divergence. What we have basically done in the bull is that the bull has worked an overbought process of 92% on a percent DS level to an area of 46.56% on a percent DS level. Overbought, and now we're not. And we're below the 10-week until we're above the 10-week and consolidate 4 weeks above it. It will remain in what we call a bull rally in 2012 to a bear reversal, because it's not the bull trend that it is this way. It is trading a bear. I buy support, sell resistance. I buy support and I sell into resistance. I buy lower lows and sell into lower high resistances in certain stocks. I will tell you that the selling continues to increase. Here is 1400 on that level. Yes, I said that you will have levels of support around 1396, because you will. It's when the selling would pick up when you break the key level here, which is a yearly bull level on the S&P. Everyone be aware that as we come down, even though that Obama got reelected and there's a lot of disappointment in it, they've got no choice but to work together. What I will tell my people is that we will look for the very best quality stocks that are the high beta, that are the most deeply oversold, to trade off of the bottoms. Now, on the other side of that note is that the stocks that go up and hit those key resistance levels will be selling short and buying put options and doing everything else. When we start getting into massive selling, right now, as you can see in this live video, and we're live in the market, S&P broke that. It's down 30 handles. Look at the Dow. You haven't had 300 points down in the Dow of that kind of volatility that we pointed out that would happen in the Obama scenario. Okay? However, it's our belief that something good is still yet to come. However, people that own stocks, you better have stop market orders on them. This is a big, big haircut. You're below 3,000 on the NASDAQ comp. and 1398 on this S&P and 285 points. And in this live video right here, right now, at 7:53 a.m. Pacific Standard Time on 11/7/2012, day after the election, S&P 500 weekly has gone into the first weekly bear reversal. It has to have 4 weeks below the 10 weeks. So you got 1 week here, 2 weeks here. This is the third week. 1 more week below that 10-week moving average, then it becomes not buying the bull bounces, but buying and understanding how to trade the bear side of these trends. And bear markets, bear reversals are actually better trading than overall hardcore bull trends, because you get both sides of the market. You get the short side, you get the long side, and I am breaking down hardcore on S&P 500 intraday right now. Markets have almost been open 1 hour and a half. We're below that 1400 level, and I am updating everyone because we have put options on this S&P 500 now. And I'm going to conclude that now.